Hey guys, welcome back to the channel. I'm Tinesha Davis. This is Fun and Budget, where we talk about all things money. Okay, in this video, we are going to talk about our mortgage update number 11. Let's just jump into it. The last time we did this video was in January. So we are updating you guys on this journey every other month. And our last update, we were at $331,330 that I had left to pay on my mortgage, okay? So let's take a look of where we are now. In this video, we are going to talk about our February and our March payments, okay? So in February, we did a few transactions. We made a principal only payment of $1,595. So of course that just went straight to the principal. And then we made our regular mortgage payment of $2,582.31. From that payment, $1,050.42 went to the principal and $759.30 went to the interest. $772.59 went to the escrow. We also see that my account was debited for $2,635, and that was from the escrow account, and that was to pay my 6-month insurance premium. And then we also see that I made a payment of $81.14. Let's talk about that $81.14. The reason why I made an $81.14 payment is because I had received, I guess, maybe this happens every 6 months. I'm not sure. Maybe once a year. I'm not sure. But it's basically when your mortgage company contacts you through a letter letting you know that your escrow was a little short, and usually this happens because property taxes are raised or maybe your insurance premium goes up, and therefore they have to kind of adjust to meet the new bill, right? And so for them, they said that I was $81.14 short in my escrow account, and therefore what they do is they go ahead and they pay it, and then they just attach that $81.14 onto my mortgage, and then they also will adjust my mortgage, what I pay, to kind of make up for that for the next year, right? And so that $2,582 went up to $2,590, give or take. But what they do is they also give you an option. They say you can go ahead and pay this $81.14, and therefore we won't raise your monthly mortgage bill. You know, what's due in your monthly mortgage. So that's what I opted for. I sent them the $81.14. But when I did that, I noticed that they hadn't adjusted my mortgage payment for the future. They still treated my mortgage payment as if I didn't pay that $81.14. So therefore I was like, let me go ahead and be on top of my business, because honestly I was just gonna let it slide and just be like, whatever, it's like $6 extra a month, blah 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 blah. But then I was like, no, I'm on a journey to pay off this mortgage, and that $6 extra a month or whatever could actually go to my principal and help me pay this thing down, and not just sit in an account not being used until a 6-month bill is due to be paid, right? So that inspired me to go ahead and give them a call. So let's take a break real quick and let's take a look at that call and what I learned from the call. Hi, yes. I had sent in a payment for my escrow shortage of $81.14. And so I did that in lieu of having my monthly payment go up. But it seems, you know, like, I don't know, they added that to my escrow account, but they didn't adjust my monthly payments.
Even with that particular payment, we're still seeing a slight increase to the amount you pay each month. Shortage payment is really just there to ensure that the account doesn't go below your required The increase would have been less than $2. Looks like it would have been about $1 and 40 something cents.
And is that because it's estimated that the escrow went up this year or something to that effect?
Correct.
Okay. Now let me ask you another question.
Sure.
What process can I take to have it so that I pay my own escrow?
To pay the escrow yourself, what you would need to do is you'd actually need to send us a letter in writing requesting the removal of escrow. There are a few requirements involved. One thing I'm looking at here is that you have a VA loan. You are eligible to have the escrow removed.
Okay.
However, the loan does need to have at least 12 monthly payments made. So the loan has to be at least a year old, essentially.
All right. And so with the letter, what do I do? Do I email it?
You can email it or send it in, or send it in through the post office. And what you'll want to do is make sure, of course, you include your loan information, so your loan number, your address, your name, and it just simply needs to say that you wish to remove escrow from your account. So it doesn't need to be anything grandiose or
And should the subject line say anything particular?
Probably just request to remove escrow.
And let me ask you another question. So if I refinance, that will stop the escrow seasoning all over again?
Well, since you're on a VA loan, if you were to refinance, you can request it be refinanced without escrow.
Okay.
Once you refinance, the documentation would normally either have escrow or not have escrow. So once you send the documents that show that the account is escrowed, then we have to go through the process to have it removed.
Understood.
There's a few things that are required that must be escrowed, but luckily your loan doesn't have either one of those. Mortgage insurance being one of them. The VA doesn't usually provide that, and then flood insurance, which you're not in an area that's listed as being a flood risk. So now, if you want you to bear in mind, if you fail to timely pay the taxes or the homeowner's insurance, the account automatically re-escrows. At that point, we can no longer have it removed. So that's one thing I do want to advise you of. If you're looking at having it removed, just want to make sure, which with your payment history with the loan so far, I don't foresee that being an issue.
Yay, guys. So you see what just happened there. You heard everything. And again, my ultimate motivation is to pay my escrow myself, because that is all good. Let me tell you, right now, currently, if I look at my payment history and I look at like March's payment, $780 went to escrow. So that's $780 a month that went to escrow that I am missing out on points for, right? Because 780 times 12 equals $9,360. $9,360 worth of points that I'm missing out on. Currently, I pay my car insurance. I pay my car property taxes, which is all with the same administration. I don't know, the government. It's all the same bill. I pay that using my credit card. So I get the points for that. So it's like, hey, I might as well get the points. And then also on top of that, I don't have to worry about my mortgage payment fluctuating every time the escrow goes up or goes down or does whatever. I can just make my straight mortgage payment to the loan and not have them pay my bills for me. I can pay my own bills. So that is pretty dope. And so what I'm going to do now, being that we're being proactive, I'm going to go ahead and draft that letter to them now and just leave it in my drafts and email. And therefore, after I do my April payment, let's say like around April 15th or so, I'll be ready to go. Like that letter will be ready to go while it's all fresh in my brain. And I could just hit send. Back to the video. Okay, everybody, welcome back. So we talked about February. Now, let's talk about March. In March, I made a principal-only payment of $1,500. And then I made my normal mortgage payment of $2,590.49. Ding, ding, ding. Remember, they raised it because of the shortage in the escrow account. And from that payment, $1,056.48 went to principal. $753.24 went to interest, and $780.70 went to the escrow. Now, let's look at this real quick for a second. So what we see is that my mortgage increased $8.18 due to the shortage in the escrow. Honestly, guys, like I said, I still stand by that. $8.18 could go toward my principal and not just sit in an account where I don't even receive tax advantages. I don't even receive interest or anything like that. So that account really behooves them, and it does not benefit me. And this year, 2021, we are all about what can I do that can benefit me more so than the proverbial them. Okay. The other thing, let me see something else in comparison. Okay, so the other thing we notice is that my interest went down $6. And again, a lot of this is due to me throwing large chunks at my mortgage and, you know, just really bringing down that interest. One of my goals, a lot of you know, when we first started this thing out, was I want to get to the point where I'm paying more in my principal than I'm paying in interest, because a lot of you know that when you first sign up for a mortgage loan, you pay more in interest than you pay towards your principal. So I'm now at that place where I'm paying more in principal than interest. So that's pretty cool. So after all of that is said and done, the new balance on my mortgage is $326,128. This is $5,202 lower than it was when we looked at this 2 months ago. Okay, like I said, initially when we was doing this mortgage journey, the mortgage payoff journey, I would update this maybe once every 6 months, sometimes once a year, because I just really like seeing that big movement. But honestly, now that I see that in 2 months I paid my mortgage down $5,202, it actually makes me want to throw more at this mortgage so that we can have bigger movement for these updates, y'all, because I want something bigger. I want like $10,000 or whatever. But yeah, so $5,000, and you guys see that my interest rate is 2.75%. And this mortgage started in March of 2020, and that is because I refinanced it from a 3.25, I believe it was, to a 2.75. I believe it was 3.25. This is scheduled to be paid off in July of 2043. This, my friends, takes us to our charts. Let's take a look at our charts and let's color them in, and let's highlight them and shade them and all of that good stuff. Okay. All right, guys, so here is the first chart, and basically this chart I made myself. There's 512 blocks on this chart because when I started this, we had $512,000 left on this mortgage to pay. So each block represents $1,000, and once again, we know that we paid this down by $5,000, so I can color in 5 more blocks. Okay, and there we have it. 5 blocks are colored in. Next, bam, let's take a look at our amortization. Amortization. I want amortization. It's like I want to put an extra syllable in there. Let's take a look at this schedule. And so basically, this is everything that we have colored in so far. And let's just keep this one here. And this is where we are. This is the goal that we're shooting for now. Our next goal is to get our mortgage down under the to get it in the 200,000s. Okay, right now we're in the 300,000s. We want to get it into the 200,000. $5,000. We are at $326,128. So this means that we can color this to right here. And again, we seen how on our thing it said that this thing was due to be paid off in July of 2043? But so far, we are at March of 2021, and we already got this paid down to July of 2027. So we are that far ahead. We need to make the equivalent of 18 more payments, 18 more of these, and we will reach our next goal. And we will be in the 200,000s, y'all. I don't even know what that feels like to have a mortgage that's in the 200s. Oh, let me stop. Yes, I do. I have another property, a rental property. The mortgage is in the 200,000s. But for this house that started in the 600,000s, it's going to be super dope to get down there to the 200,000s. So there you have it, guys. Thank you all for watching. That's where we are right now. And once again, I'm inspired to try to put even more money on this mortgage to get that number down and to close the gap of those 18 more movements we need to get in the 200,000s. Like, I can't wait. Obviously, I feel that I should be able to do it within the year, but wouldn't it be nice if I can do it sooner than that? Until the next video, y'all, do not forget to thumbs up. Subscribe if you're not a member of the Fun and Budget family. And talk to me in the comments below. And I will meet you there. Until the next video, y'all. Peace.